What if I told you that you could be right about silver going to $100 and still lose thousands of dollars the moment you sell? Not because the price dropped, but because of taxes. Right now, everyone is watching silver charts, premiums, comics rumors, but almost nobody is asking the only question that matters when you cash out. How much of that profit do you actually keep? And there's one dangerous belief spreading fast, that if your dealer doesn't report your sale, you don't owe anything. That idea is not just wrong, it's expensive. Welcome to Silver Signal. Here's the part most investors never read. Under US tax law, your silver coins are not treated like stocks. They're classified as collectibles. And that single word changes everything. Because collectibles don't get the standard 15% or 20% capital gains rate. They can be taxed at up to 28%. That's a completely different game. Now here's where it gets interesting. The 28% is not automatic. It's a ceiling. If your income bracket is lower, you pay that lower rate. But if you're in a higher bracket, the IRS caps you at 28%. Sounds fair? Until you realize what happens if you sell too early. If you hold your silver for less than 1 year, there is no cap. You're taxed as ordinary income up to 37%. Same silver, same profit. Completely different tax bill, just based on timing. Now, here's where things get dangerous, and almost nobody explains this clearly. The updated 1099-B rules. You've probably heard this already. Dealers don't report silver coin sales. And technically, that's true in most cases. American Silver Eagles, not reportable. Morgan Dollars, not reportable. You could sell a massive stack, and your dealer may not file anything. But here's the part people conveniently ignore. Your dealer's reporting requirement has nothing to do with your tax obligation. Nothing. The IRS doesn't care whether a form was filed. They care whether you reported your gain. And if you didn't, and they catch it later through bank records or audits, you're not just paying taxes. You're paying penalties, interest, and attention you do not want. Let me say this clearly. No 1099-B does not mean no tax. It means the responsibility is entirely on you. Now let's hit the mistake that's quietly costing silver investors real money right now. Most people calculate profit using spot price. That's wrong, and it's costing people thousands. Your real cost basis is not just what spot was when you bought. It includes your premiums, your shipping, your insurance, everything you paid to get those coins in your hand. And if you bought during 2021 or 2022, you already know premiums went insane. $10, $15, even $20 over spot. If you ignore that, you're inflating your profit on paper and overpaying taxes in real life. Quick example, if your true cost was $36 and you sell at $85, your gain is $49, not $59. That's a $10 difference per coin. On a serious stack, that's not small money, that's a tax bill mistake. Now here's the part most people never think about, but this is where you actually keep more of your money. Strategy. Real legal strategy. First, holding period. If you're close to that 12-month mark, selling early is one of the most expensive mistakes you can make. Waiting a few weeks could drop your tax rate significantly. Second, loss harvesting. If you have any losing investments, silver, stocks, anything, you can use those losses to offset your gains. Dollar for dollar. That means less taxable profit. Most people ignore their losers, but that's exactly where the tax savings are hiding. And third, timing your sales. If you dump your entire stack in 1 year, you stack all that income on top of everything else, and you could push yourself into a higher bracket. But if you split your sales across 2 tax years, you can control your tax exposure. Same silver, same price, completely different outcome. Here's the punchline, and this is the part you need to remember. The market pays you, but the IRS decides how much you're allowed to keep. If you don't understand the rules before you sell, you're not investing, you're guessing. And guessing is expensive, so before you sell a single ounce, do 3 things. Rebuild your real cost basis, including every premium and fee. Check your holding period, because timing changes everything. And think strategically about when you sell, not just how much you sell, because the difference between a smart exit and a careless one is measured in real money. If you're holding silver right now and planning to sell in the next 12 months, you need to subscribe to Silver Signal, because the next video breaks down exactly how to report your silver sales, step-by-step on Form 8949, so you don't make a single mistake when tax season hits. Like the video if this opened your eyes, and share it with someone who still thinks no 1099 means no tax, because that mistake is costing people more than any price drop ever will. This is Silver Signal, where we don't just follow the price. We help you keep the profit